Is it better to trade with a prop firm's money or to trade with your own money is the million-dollar question. And in this video, I'm gonna answer exactly that. Now make sure you watch this entire video because my answer might shock you. And yes, I know I talk a lot about the benefits of trading with prop firms' money on this channel. However, it's not the right decision for everyone. Now, I've been trading Forex for the past 6 years, and I've even owned my own prop firm, as well as helped hundreds of people become funded prop traders, so I feel like I'm credible enough to speak on this subject. So in this video, I'm gonna go over the pros and cons of trading with prop firms' money as well as your own money, and then give you a really quick decision tree that'll make it really easy for you to answer a couple questions and know if you should, in fact, trade with a prop firm or not. So let's dive into it really quickly. Now, I'm assuming if you're watching this video, you already know what a prop firm is. If you don't, prop firms are proprietary trading firms, basically firms that have access to large amounts of capital that are looking to hire traders like me and you in exchange for a profit split. One of my favorite prop firms right now happens to be one called TrueForexFunds.com. You can sign up to get $100,000 worth of trading capital by taking a $500 test. And if you can do 8% profit in 30 days, you'll move on to phase 2, where you have to do a 5% profit target within 60 days. And if that happens, then you get $100,000 worth of trading capital to trade with. And this is the general model of how a lot of modern day online prop firms actually work. And I'm assuming, again, if you're watching this video, you already knew this. So let's go ahead and let's take a look at this right now. Some of the pros of actually trading with a prop firm's money. The number one benefit I would say is that you get access to a lot of capital relatively quickly if you can pass their challenge that is. Now, this does make sense for a lot of people that don't have access to a lot of capital. If you can prove that you're a good trader and pass these tests, which is not easy to do, I'll talk about how you can increase your odds later on dramatically. But one of the biggest draws is to get assets under management. All of the big hedge fund guys, that's the metric that they track, is they're tracking assets under management. And this allows you to get assets under management relatively quickly without having to risk your own life savings or borrow money from friends and family members. The second thing that I would say is a major advantage to prop firms is actually that it forces you to learn risk management. Prop firms have very strict rules, especially when it comes to passing their test, where you have to do X amount of profit without hitting a daily drawdown limit or a max overall limit. So I think just going through this process, and even if you're new to trading and you fail several challenges, it forces you to learn about risk management. And this is a skill that will be a benefit to you throughout the remainder of your trading career. So I think that while some people may argue that prop firms are too strict or this or that, it's actually really good for you even when you want to go out and trade your own money. The third benefit I would say is that it dramatically reduces your risk. It kind of reduces your risk, right? Because you're not having to risk $100,000. However, you are risking $500 in order to take one of these tests to get access to $100,000. And so while it does dramatically reduce your risk, the risk is not entirely gone, because the reality is that only a few percentage of people actually get funded when they're taking these tests. So I'm going to cover the statistics in just a second, but it is one of the benefits. Get access to more capital with less risk out of your own pocket. Now, let's talk about a few of the cons with trading with prop firms' money. Number one, I would say, is that you really have limited freedom. A lot of prop firms have very strict rules on how they allow you to trade, if you can hold trades over the news, if you can hold trades overnight, all of these different rules. So it definitely limits your freedom and your creativity when it comes to building your trading strategy. The second big con I would say is that it puts a lot of pressure on you to perform within a certain time period. Now, generally, if you're trading your own live account, you don't have this time pressure. When you're trading, for example, a prop firm test, generally you have to pass phase 1 within the period of about 30 days. So there is this time pressure that crunches you that can allow you to make different decisions than you may normally. And if you think about one of the exciting things about sports, right, is that when the clock crunches down to the fourth quarter and there's a few minutes left in the game, that's when things get really exciting. And that may not be the best thing for your trading, because you want to try to remain as unemotional as possible. Another con of prop firms is that you're dependent on the specific prop firm. And unfortunately, there's a lot of prop firms in this industry that are shady, that don't want you to win, that don't want to pay you out, and are looking for any excuse not to have to pay you. And so it does make you dependent on a prop firm. And that's part of the reason why, I really only talk about like the top 5 prop firms, which I'll tell you those in just a second. Because if you're trading with a newer prop firm, then the chances of you actually getting a payout go down dramatically. Now, the fourth con about this is that it's really hard to pass these prop firm challenges. The statistics show us some of the top prop firms like My Forex Funds have shown us that literally only 6 6% of people that take the test pass both phase 1 and phase 2 and actually become funded traders. And out of that 6%, even less percent of people actually get their first payout. So the reality is that the odds of you becoming a funded trader and making a payout are actually very, very small. Now, if you'd like to dramatically increase your odds, one of the best ways that we've found to do that is by trading with AI or trading with expert advisors. An automated trading strategy can help get rid of a lot of the emotion. You can see more at propfarming.com, but you can see here we have strategies that have passed like 90 to 96% of the time historically over the course of the last 52 weeks, which is pretty insane, where we're almost 10xing the odds of people having success at passing prop firm challenges, getting funded, and actually making a payout. And again, if you'd like to see more details about how this works and how we can guarantee your success, then go to propfarming.com. Now, the last con to trading with prop firms is that you have a profit share, where generally you're only going to take about 80% of the profits. I'm not going to call this as a major con because you're still getting 80% of the profits, which is really, really strong. Now, let's go ahead and talk about the advantages and disadvantages to actually trading your own money. And then I want to show you this decision tree that'll make your decision really, really simple. Now, I'd say the number one advantage to trading your own money is that you have full control. You have full control when you want to make a withdrawal, how much you want to withdraw, what sort of trading strategy you want to use. This is the big benefit of trading your own capital. The other big benefit is that you get 100% of the profits. There's nobody that you're sharing profits with. And probably the third thing that's maybe the most important thing I'd say is that there's no restrictions. So there's no timeline, there's no time pressure, there's nobody telling you about what tools you can use to trade with, how long you can hold trades, what targets you have to go through, what sort of drawdown you're allowed to have. All of this completely gets eliminated when you're trading your own money, obviously, which I would say is a pro and also a con because it doesn't force you to use this strict risk management like you do when you're trading with prop firms, which I think is like a hidden advantage to actually learning to trade with prop firms, is that you learn really good risk management. Now, I'd say the big cons to trading your own money is a lot of the times you're going to have less capital to trade with than you would if you were to pass a prop firm challenge and trade with the prop firm's money. And as you know, one of the big benefits to trading is that it's a very scalable business, right? If you can do 10% on $1,000, well, if you just do 10% on $100,000, you've literally made 100 times more money without any additional work. Second big con is the risk of loss, right? If you're trading with your own money, your savings, or you borrowed money from somebody, I hope you didn't do that. By the way, you can put this at risk fairly easily if you're trading your own funds without any proper risk management guidelines. Okay, so now let's get down to this. Let's talk about it. What does it make more sense to do? Trade with your own money or trade with a prop firm's money? The first question that you have to answer is this. Number one is, do you have an edge? Okay, do you have a proven edge that you can execute on, whether that be a manual trading strategy or something automated like we have in our prop farming program? If you do not have an edge, then what you need to do is you need to continue to trade on a demo account. It'd be really dumb of you to trade your own money or to trade a prop firm's money if you don't have an edge at this point. So if you don't have an edge, go out there and find an edge, keep trying until you do have an edge, and then you can go to this other side of the decision tree. Now, if you do in fact have an edge and the answer is yes, then the next question that you want to ask yourself is, do you have $50,000 to trade with? I put this number because I think it makes sense, okay? If you don't have $50,000 to trade with, then I would say probably the better option is to actually trade with a prop firm because you can get access to this capital. If you do have $50,000 to trade with, then I'm gonna say that it may be better to trade your own money. So now hopefully you've made a decision, and if it is the answer that you should be trading with a prop firm, what I wanna do is tell you the top 5 prop firms that I'm using right now. We've tested literally dozens and dozens of prop firms. Unfortunately, there's lots of scams. Here are the 5 best ones that we're using right now.